think we are ready to get started here. And good afternoon to everybody. Thank you for joining today. Quick introduction. My name is Michael Smith with LBMC W Squared, Senior Vice President of Systems and Integration, which is probably an interesting title for me considering we're doing this webinar under the MSO-PC blueprint. But little background for me, I did work at HCA Physician Services for a few years before joining W Squared almost 18 years ago. So I've got an accounting background, but also have a very good systems background and work with the implementations and systems here at W Squared to make sure that we get the accounting system and any other system set up properly for growth and be able to scale the companies that we work with here at W Squared. So quick introduction on myself. That's why we have that little weird nuance between my title versus what we're talking about. Have many years of accounting, so I've worked with healthcare pretty much my whole career, and that's where I've learned a lot of this information we're going to talk about today and seen a lot of it as well. So I'm going to go ahead and change and show the slides here. Okay. And we do have on our the beginning slide, Chris Morgan, who is our CEO. We have him out there as reference as well. He's not able to join us today, but that's our CEO. That is Chris Morgan. That's on the other slide there. So let's jump into the MSO and PC relationship. To start off, we're going to start talking about the legal structure and how it's different from a standalone practice that is ran and owned by the physician or a group of physicians, and what an MSO is, how some of the ownership structure changes if you take on if you sell some of your practice or the non-clinical assets, things like that. And then we're going to talk a little bit at the beginning about that relationship between the MSO and the PC, who kind of provides what services, and as a doctor or physician, what to expect. And when I use the word doctor and physician, I also am looking at this could be any sort of clinical practice. It could be a behavioral health. It could be a dentist. And so you may hear the word a DSO instead of an MSO. But we're kind of referring to it all in all practices of medicine. So what happens is the legal structure with an MSO and PC is you have a PC, which is the professional corporation, and that's where most standalone practices by doctors are a PC. You may even, and this is different from state to state. So the corporate practice of medicine is different from state to state on how it's set up. Sometimes it could be a PLLC or a PA. Those are all still kind of the same type of structure. And we always call that a PC, even though it may truly be a different type of entity. But it's still referring to the same thing. It's the physician-owned legal entity where most of your contracts are with your insurance carriers, with Medicare, anything that you're dealing with as a standalone practice. That's what we're referring to as the PC entity. What happens if a investment group or a PE group decides to buy in and purchase the non-clinical assets of your practice, that's when an MSO-PC relationship tends to happen. A lot of groups don't have a MSO-PC relationship prior to that purchase. We have seen that before to get ready for that, but typically it's not worth the dollars or the time spent to set that up on your own. So we usually see that when an outside group comes in and wants to buy a practice, and what they're obviously looking to do is buy and grow a certain type of practice, whether it be derm, cardiology, ophthalmology, dentists. We've seen so many consolidations happen over the years that we kind of see the trends of where they go, and we've seen them all. So W Squared has definitely seen a lot of these types of relationships. And that's where why we are experts in it and why we want to do this, to kind of go through this process. So the PC is the entity that the physician owns. The MSO is a management service organization. And what that management service organization does is it really runs, we'll call it the administrative side of the practice. They handle the billing, usually they will handle the billing, they'll handle the non-clinical or non-provider employees like the front desk person, the intake, the scheduling, they'll handle the nurses that may work in the practice. If there's a practice manager, most of the time that's where those employees sit on the MSO. And what that means is if you do ever sell your non-clinical assets or sell that side of the business, then those employees actually move off of the practice, typically will move off of the practice and move over to the MSO and be employed by the MSO, because that is usually in the agreement is the MSO will provide those functions to the doctor, whoever owns the friendly PC, as you may hear that called, whoever, they will provide those functions to the practice. And so that's where a lot of that, and it doesn't happen, sometimes it doesn't happen day one, but they do end up moving those employees over. So the PC is still a legal entity that is owned by the doctor or group of doctors, and they will still get a tax return from that practice. They will still be employed by the practice, and that goes for doctors and mid-levels that are still billing. So if a mid-level, a nurse practitioner, or a physician assistant is still billing, they will typically stay on the practice, the PC entity, for payroll. Also, malpractice usually gets paid out of that, out of the practice, and then any patient refunds get paid out of the practice. So you do set it up a little bit differently. And what we're going to kind of talk about today is the way to set it up, both from an accounting standpoint, but also from a reporting standpoint in that accounting, so that we can understand what's happening from a tax perspective and what happens from an operational perspective. Because you are going to have, depending on what type of practice, if it's a telehealth, it's not as important, but if it's a four-wall, like a lot of practices are, you want to be able to report on both legal entities, but understand if you have multi-location, what's happening at each location and what's happening per legal entity for tax. Because what you don't want to do is get to the end of the year and then have to pay a tax person or somebody else to go through and split your accounting books based off legal entity on the activity. If it's done at the beginning, much easier at the end of the year, and makes it a lot cleaner for the tax returns as well. In some cases, you also may get audited. So that's another important piece, is that if you have an audit when you set up an MSO-PC relationship, you want to be able to clearly identify a lot of that information from a contract perspective, so that the audits go a little bit easier. So those are kind of the two differences in the entities. Is one is physician owned, one is usually owned by we'll say investor, but they're not investing. They're really buying your practice, the non-clinical assets of your practice, and then they're looking for other practices to also purchase and service from a management service organization perspective. And the reason that they have to do that is, like I said, the corporate practice of medicine, it is defined by each state. So each state has their different laws and regulations for compliance to be able to say, hey, we don't want a non-physician to be able to own a medical practice. And then possibly the reason they do that is so that a non-physician can't then dictate to a physician how to practice medicine. They don't want a PE group or an investor to come in and say, no, you need to do your medicine this way. That's what the doctors need to do. They need to run their practice and make decisions, medical decisions, offset of what the profits and what you're going to be able to bill and things like that. You're making the medical decision of why you need to do this procedure or do this. So that's the whole reason that you have that separation of legal entity. Now, what it does allow you to do, though, is still be managed, and it does kind of take some of the management of the practice out of the physician, because they don't have to worry about maybe the hiring and firing of different personnel. They don't need to worry about the sublease for the rent when it comes up, because that's going to be managed by the MSO organization, as well as workers' comp for the employees that are not on their organization, and all the other just administrative things that a lot of doctors have to do to run their business. Now, a lot of the doctors will also have different key personnel at their practice that does that when they're a standalone practice, but they want to, in this MSO-PC relationship, that's usually all handled by the MSO. And it's all around based off that corporate practice of medicine. As we're getting into the contractual relationships, there are many different ways that that MSO-PC relationship can be written on paper. And you may hear that called the MSA or the Master Service Agreement. Some people call it a PSA, for Professional Services Agreement. A lot of different acronyms in this type of relationship. But that MSA, or that Management Service Agreement, is going to define what the MSO does for the PC and how they then charge a fee to the practice to do those administrative services. Some of those things maintain the procurement of medical supplies, the procurement of non-medical supplies or contracts, like if you're talking about your shredding of records. All of those kind of contracts are going to be done on the MSO and usually get reassigned from the PC to the MSO, so that they can control that. What that does for the MSO is, if they get other practices and they purchase other practices, or they're growing that MSO, they can then rely on greater purchasing power, because they're able to go in and say, hey, we've got 20 practices or 20 locations now that we are actually purchasing for, and then they're able to get lower pricing and be able to help with what their ultimate goal is to manage the practices from an administrative standpoint. Some of those include how who controls the hiring and firing of certain personnel. It also can control anything that's in that relationship can be controlled in that MSA. And you definitely want to obtain a lawyer that understands this MSO-PC relationship and has experience with it, because those agreements can get very detailed and describe who does what. But you also want to be sure that it's not somebody that's just putting them together and doesn't follow the corporate practice of medicine and put you in a risk for compliance as well. So very important to understand the structure, very important to understand that managed service agreement, make sure that you have the correct lawyers in place for that, as well as the accountants. We handle a lot of practices prior that are standalone, and I think there's a lot of good practices that can be done by LBMC W Squared that can be on a standalone practice that is transitioning or wants to transition to a MSO-PC relationship, or one that has recently been purchased, where the non-clinical assets have been purchased by a PE group. A lot of times LBMC W Squared has been brought in for that, to make sure that the setup is correct from an accounting structure and from a reporting structure, to be able to properly report to everybody that needs it. And with that, we will talk about the financial management best practices next, because that's where we're trying to make sure everybody who reads financials, everybody who's looking at them, understands what's happening. It is obviously a lot different if you have multiple PCs with one MSO, whether you have multiple locations, also the different department structures that could be set up. We're looking at a lot of that information when we go in and we start building out your accounting and financial packages and your entire system that we need. When we look at the key principles, we want to be sure that we understand what both sides of the relationship need. Sometimes the doctor needs to understand things a little bit differently than what the MSO needs to look at. But at the end of the day, everything is going to be reported together. So we need to set it up where the doctor can get what he or she needs from a tax perspective, but we can also get the MSO relationship or the MSO entity what they need to be able to understand how they're running their practice from the administrative side and where things could be more efficient and understand the cost and revenues. There's always a lot of information when you're talking about the revenue side on the healthcare, because you look at CPTs, you look at billing, and when you get into the KPIs and analytics of that, usually that is done outside of the accounting system. Now, we can obviously take certain KPIs and put those into the financial package to be able to report on that and hopefully understand where if revenue is going up, revenue is going down, things like that. But what we're really going to be looking at is a lot of the costs of the practice, because that's what the MSO kind of can control, is the cost of what they're spending. Whereas on the PC, their main goal is to get revenue. There's not a lot of the costs don't sit on the PC other than the provider's salaries. And that's usually negotiated at the beginning of the contract to say, hey, the providers, here's what they're getting paid. And so there's not a ton of costs that typically sit on the PC. So all the costs are important to sit on the MSO side to be able to control those expenses, understand where the money is going on those expenses, and understand where they can look at efficiencies, make sure that they're getting coded to the correct location. If you have a multi-location practice, which a lot of doctors do, you want to be sure that those costs are getting coded correctly, as well as overhead costs. There's a lot of overhead costs when you get into an MSO-PC relationship that, if you have somebody kind of running the whole thing, well, they're not working at one individual location. So you want to be able to build how you get that overhead. And then some people will allocate that down to individual locations. Some people will just leave it at the actual department to understand what their full baked in cost is for, let's say, an HR department or a payroll department or an IT department. And that is all part of what the MSO handles in this relationship. And the way that we build our financials is we can build it where you actually see the total practice. So you get your revenues and then all your other costs. But we can also split it by entity so that you can see how much a physician is the physician or providers cost you. You can also build it for exactly what we talked about earlier with the tax perspective, to make it easier to give the tax people what they need and allow them to do what they need to do. So that's one thing that we've really built on here at W Squared over the last 18 years is how to set all that up to scale and grow, but also how to make it so that there's not a lot of rework at the end of the year, or it's easier to read financials in that kind of perspective and be able to see what is truly happening with the business. We've had a lot of people that have come to us that they get their financials, but they're like, we don't really know what's happening with our financials. We just are getting numbers, but we have a lot of questions. Those are the things that we try to help with is, one, make sure that the financials are correct, but two, make sure that we know and can answer questions of why did this number go up or why is this number going down, and give you more informed information that allows you to understand what is happening in your business. And a lot of times the doctors might not care about that once they have an MSO-PC relationship. But a lot of times what happens is in the MSO-PC relationship, a doctor may have some equity in the MSO entity because it is beneficial to have the doctor's buy-in and understand what is happening on the MSO side as well, because they may want to recruit other physicians to be part of the relationship, but they may have some some actual investment or some buy-in on the MSO side. So they need to understand what's going on with the financials as well, and ask a lot of the questions if they're having them. And then, when we talk about KPIs and how we build those KPIs into financials, we can actually build in, say price per encounter or price per visit on revenue. Because then you're able to get into some budgeting and some forecasting that is going to help down the road, which a lot of practices, standalone practices, don't do budgeting well. And it's because most practices will run on cash basis because that's what they understand. And if you have multiple doctors that own a practice, it's a lot easier to distribute between the doctors based off cash basis, what they bring in versus what they spend. And then there's, have some sort of overhead allocation. So being able to understand all those key functions of how all that works is very important before you pick a outsourced provider, because a lot of times some providers may say they know how to do healthcare, but they don't understand the PC MSO relationship as well as we do. So obviously reporting and being able to read financials is where we come in on a lot of this. We also have other good entities or practices here at LBMC where we can help with other things like procurement or like technologies or payroll if a practice needs that. So I don't want to say it's a one-stop shop, but we are kind of a one-stop shop for a lot of practices. And we can bundle those services up for a lot of practices to be able to run their business a lot more efficient and kind of not worry about the business side. They worry about the running the practice from a medical side, which is what most doctors should be doing. So jumping over into why we think a lot of this, understanding this is important is, first of all, if you are a standalone practice today, and you do have a possibility that you're going to go in and you're going to look for a buyer to come in and buy your practice or your non-clinical assets, you're going to get a valuation. And what they're going to look at is whoever's going to buy your non-clinical assets is going to kind of look at and say, okay, what do we value their practice at? They're going to look at the accounting today. They're going to do a Q of E on everything. And they're going to say, okay, does everything match up with what they're looking at? But they're going to want to see it on accrual basis. If you are already on cash basis, sometimes cash basis is pretty easy to look at, but it may not be what an investor or buyer wants to look at. They want to see what accrual basis looks like. And what I mean by that is if you go and do all your services in the month of March, you may collect, say, 50% of those services in the month of March, but then you're going to get more payments 30, 60 days afterwards, which is your cash lag. Well, you're not matching the expenses that you paid in March or that you accrued in March with the revenues that you have in March if you're in cash basis. And most investors or buyers want to see that in accrual basis. So they're going to try to convert that over to accrual basis. And if they have a lot of questions, it's a lot of time and effort and money to do that. So if you are thinking about going into some sort of transaction, or you're going to look for that, it could be because you're retiring, or it could be just because you want some outside help to help grow your own practice. That's something that could be looked at of, hey, maybe we want to switch over to accrual basis accounting before we get to that transaction, so that it makes it a little bit easier for the investor to understand what's happening in the business. What we've also seen a lot of is we've seen a lot of accounting, we'll call it errors, or just not great processes when we do start looking at some practices, because it may be an office manager that doesn't really know accounting, and the doctor didn't really put in a lot of value in accounting. But when they got to a transaction, had they put in a little bit more value before, they probably would have got a better valuation for their practice, because it's a lot cleaner. It doesn't cost as much to get to understand what is truly happening with the practice. And so they do get a little bit of a better valuation, and we're able to then go in and be able to help them at that time. And so we do think that even before you get to a transaction, LBMC W Squared can help you with your practice today, even if it's a standalone practice. Before you do decide to do a transaction, we've got many practices that we work with like that today. The other thing that can happen is you want to, they're going to value your practice, and then there is, if the flawed accounting and reporting, it raises a ton of questions, because are we capturing everything? Are there outstanding invoices that have not been captured in these financials? Is there risk that we're going to get a year down the road and get some invoice from a vendor that we don't know about? That's all taken into account when you go in and talk with an investor or talk with a buyer that is going to, they're going to raise some questions that can then lower how much you get paid. So structuring that, structuring all the reporting and all the accounting is super important when you're talking about these kind of relationships. But then it is even just as important after the relationship is formed, and when that MSO-PC relationship happens, because you do want to report it correctly, because there are some tax issues that we talked about earlier between the MSO and the PC that need to be accounted for properly. Also, a lot of practices don't look at, they may not factor in when they record payroll, how they're recording payroll, whether it's by provider or by non-provider salaries. That all takes into account in your valuation, because they want to know, most people want to know, how much am I paying my providers? How much is my cost of staff that are not providers? And understand, are you overstaffed? Are you understaffed? Things like that are very important when you get into this valuation. So, at LBMC W Squared, we handle a lot of that, and we help the doctor and or administrative side build their accounting practice and their structure and reporting package to help understand those financials a lot better. So, this relationship is very important in healthcare. It allows a lot of outside investors to buy into healthcare practices and help grow those practices along the way. So if that's something that you are very interested in, I would definitely encourage everybody that sees this to definitely jump on a call with either Chris Morgan or Lauren Farley or myself, and we can definitely talk through how we can help you and your practice along the way. So with that said, I think that kind of concludes our webinar today. Check, and I've got Alec and Lauren are kind of in the background, but do we have any questions out there today from the webinar? We can't hear you, Alec.
There you go. I appreciate it. I just want to say great presentation. For everyone who's just joining in, or if you get a recording of this webinar, we will be sending out a recording afterwards. Feel free to drop any questions in the chat here. Looks like Scott has a question. If you just want to go ahead and type it in for us, and I'm sure Michael can address that for you. We got all the slides here as well.
Let's see. letting Scott. Might be a good question. Okay, so Scott asks, we are on an MSO-PC. We are getting tax work done on MSO. Should we get a tax audit on our PCs as well? I think I think that that's two different things. The tax, you definitely have to get tax work done. There's no doubt on that. You have to get the PC has to have their tax done. When you talk about an audit, usually that is determined based off if there's debt structure and or whoever the buyer is. So if a PE firm buys the practice, they will determine whether or not you need an audit. But usually in that audit, the PC and the MSO do tend to get audited together because there is some control from the MSO on the PC of some decision control as far as how the practice runs, not necessarily from a medical side, but usually the PC and MSO get audited together because what happens is the MSO's administrative fee is dependent on the revenues and the expenses of the practice. So that's where they usually get audited together and they're audited in consolidation. That's a great question. Let's see. I think that looks like about the only questions out there. All right. All right. And I think, Lauren, if you want to jump in for a second and give some contact information for you and how to reach you, it definitely can do that.
Yeah. Thanks, Michael. That was great. I actually learned a whole lot on there. I am Lauren Farley. I'm the Director of Growth here at LBMC W Squared. I won't give you my information right here, but it will be in a follow-up email with the recording. So please feel free to reach out to me, even if you have questions. We're always glad to just provide education and anything that can be helpful. But thank you guys so much for joining today. Alec, do you have any other items or anything?
Yeah, that's all we have for today. As I mentioned, we will have a follow-up email once this live is ended. You'll have a recording. We're going to do some follow-up posts on the W Squared website in case there's any content that you missed or you want to reviewed. And as Michael and Lauren said, if you have any questions, feel free to reach out to them, and hopefully we'll cover some more content on this soon. So unless there's anything you want to add, Michael, we appreciate all y'all joining and giving this a watch.
Yeah, absolutely. Thanks, everybody. And hopefully it was informational. There's a lot of nuances in this kind of relationship. So the biggest thing I will end with is be sure you hire the right people to help with it.
All right. Good to see you all. Have a good day.